Startup companies have changed over the last decade. These companies can go international very, very quickly indeed, whereas in the past that may have taken longer. So you can still have a very young company with significant revenues, and those revenues could be generated on a global basis. Some of the challenges that companies face with this very sort of short and steep growth trajectory is really the pressure it places on the company's infrastructure. And so that could be hiring the right people, whether it's engineers or whether it's filling out the executive team. That could be putting the right systems in place. The model for financing has shifted a little, probably in the last decade. A lot of these companies, certainly the ones that are software and internet-based technologies, they require a lot less dollars to really get started, to get going. So you can have a company today with a much lower investment from a venture capitalist, for example, than say 10 years ago. Or alternatively, it could be a lot of these crowdsourced funding models, which are just starting up and starting to become quite popular. And that opens up the door for a lot of these companies to get funding, probably much sooner than they would have done otherwise. When we look at the IPO market and the criteria that's necessary before a company can go public, I think a number of things have changed. First of all, the time to offering, the time to a liquidity event is generally a lot longer than it has been historically. And I think part of that is reflected in the fact that companies realize they need to achieve a certain level of revenue. Now, that doesn't necessarily mean you need to be profitable at the time of the IPO, but there certainly should be a path to profitability in the company's plans. And when looking at operating cash flows, they should at least demonstrate that the company has an opportunity to generate positive cash flows in the near term.